What's up, everybody? Today, the stock market is literally the color of my shirt, and I want to explain to you why it's the color of my shirt, red, red baby. But more importantly, I want to go over a tweet that I put out earlier today, literally around an hour ago. So I'm going to try to do this video as quick as possible because it's around 4:15, and I have to go upstairs at 4:45 to take care of my daughter. I am babysitting. The main reason why the stock market is down today is because the credit rating Fitch is going to be downgrading a lot of banks coming soon. You see, the entire banking sector was downgraded to one grade lower. And because the entire banking sector was downgraded, you need to downgrade certain banks because a specific bank cannot be rated higher than the entire sector that they're in, which leads us to a downgrade of huge banks like JP Morgan and Bank of America. Well, if you're downgrading JP Morgan and Bank of America even a little bit, you then need to proportionately downgrade all the other banks in relation to the big banks. In a very simple term or simple analysis and explanation, that's why the entire market is red today. I put out a tweet to this earlier today, so please make sure you're following me at xfinance411 on X, formerly known as Twitter. With that said, I see a lot of people are having emotions because it must suck to have a red day, but it must suck even more emotionally that the market is beating you up after we've literally had a fantastic run since the beginning of the year. Literally 3/4 of a year, we are doing really, really good, and all of a sudden the market is starting to tank. And if this is the bottom or not, or just the beginning of a reversal or not, or we're going to keep going bullish in a couple of days or next week, I honestly don't know. I have my strategy that works for me. I sell a lot of covered calls, so I don't care if the price goes up or down. I obviously prefer up, and I make my money every single week. A lot of people are doing what I'm doing, but none of this is financial advice, purely entertainment and education, and they're making a lot of money, and a lot of people just don't want to listen. But it's okay, and I don't really care. I want to go over a tweet that I just put out talking about how Wall Street and how investing is a roller coaster. I hope this video does well. I'm trying to talk about things other than Palantir. Not that I don't love Palantir. I want to talk about Palantir all the time. I want to expand my channel and grow it. And I have a lot more to give than just speaking about Palantir. The problem is nobody listens to anything but Palantir. And although I absolutely adore Palantir, it's my largest position. My daughter has it, my son has it in their accounts, my friends and family have it. I would like to expand my channel and get to a 10,000, 100,000, million subscribers, and I got to do that by expanding. So let me try to talk about videos that usually don't do really so good, but some people actually appreciate these type of videos. This is a tweet that I put out like 30 minutes ago. I wrote, I know these red days suck, but think about the long game and navigating the stock market volatility with a forward-looking lens. So a lot of people just started investing. A lot of people got super gully as their investments are going up. A lot of people that I know are literally doubled up from Palantir. A lot of you guys played a lot of options, including myself, in PayPal and Square and Robinhood and many others, and you guys were literally 100, 200, 300% up on your investment, and now you're literally at a lower point than when you got in a month ago. Some people put the brakes on. Some people gave themselves some insurance. Some people sold out when they were in triple digits, but other people kept piling money in even though the price already went up. So I want to go over the psychological barriers of investing and in general the thesis of investing. And you could use this just for the stock market, but you could also talk about crypto and real estate, precious metals, fine wines, art. It's all about your mindset of investing. And then I got a picture right here. Don't panic. This is just a correction. Wall Street going off a cliff, right? The stock market can sometimes resemble a roller coaster, making it crucial for investors to approach it with a strategic and long-term mindset. Here's why. And now I'm going to give you guys my thoughts, and I'm going to go into this a little bit more. Hopefully you guys enjoy this. And let me know in the comments down below if you guys actually enjoy these type of videos, so I'm not just doing it for my health, because like I said, I'm probably going to get like 100 views on this video. Number one, a long-term perspective smoothens volatility. Over time, the stock market has shown a trend of rising despite its short-term fluctuations. By focusing on the long term, investors can weather temporary downturns and avoid making decisions based on short-lived emotions. The problem is we're so emotional with our investing, and everybody that's a long-term investor is not really a long-term investor. Nobody has the patience of waiting a year, 2 years, 3 years, 4 years, and this is with everything that they're investing into. Everyone has what we call an itchy finger, right, or a trigger finger. Look, you need to look at the longer game. If you go into the S&P 500, I believe it's giving you 10% year-over-year returns over the last 10 years. But at the same time, some of those years, you're actually negative returns. If you were to sell out when a company is having a really, really shitty year, you would never make those crazy returns. Look what happened to companies like Amazon that nearly went bankrupt. But look, at the end of the day, it's like the third most valuable company in the world. So when you're investing, really, I implore you to invest with a long-term mindset. Little road bumps are temporary. They happen, they're super annoying, but at the end of the day, you're still going to drive on the road and you're still going to get to your destination. So think with a different type of mindset. Compounding works best over time. The marvel on compounding allows returns to generate further returns. However, it demands time to unveil its full potential. The longer your investment sits, the more they can grow. We're talking about compound annual growth rate. The more you invest to your position, as your position rises, the more you're adding to that position, the more returns you're going to get on that specific position. A lot of people make fun of me of, why did you buy Truist Financial? It's a dividend boring stock. But at the end of the day, you can't just go growth, growth, growth. These boring dividend stocks are compounding all the time. You see, I do covered calls every single week. I take my covered call premiums. I take the covered call premiums. I buy Truist Financial Bank. Truist Financial Bank gives me another 6.5% dividend. And I'm doing this over and over and over and over and over again. And my couple of hundred or couple of $1,000s worth of premium over a long period of time adds up. For example, there's something called a rule of 72. All you got to do is take whatever you're getting divided by 72, and that's how long it's going to take you to double up. So if you take 72 and then you divide it by 6%, let's say the dividend that you're getting in Truist by Financial, that means that I'm going to double up my money in the next 12 years. So a lot of people are like, but Adam, 12 years to double up your money, it doesn't really sound right. But I'm literally making a double up on my money that's free from collecting premium on covered calls. I'm then collecting a dividend, and at the same time, hopefully the stock is appreciating. But the more I put in, the more I'm making a dividend on the more stocks that I'm buying, so on and so forth, et cetera, and et cetera. Yeah, it might take a while, but it's a snowball effect. It starts really small, but once it's rolling down the mountain, it's going to be absolutely freaking massive. So remember to keep compounding, remember to keep investing, remember to keep growing. I have a little picture over here of how the stock market goes, right? You have optimism, excitement, thrill, euphoria, and then it goes all the way down, and then there's a point of maximum financial opportunity, and then everything starts going up. I think we're in this little uptrend right here, but there's little hiccups during that uptrend. It's very important to understand about diversification. So a lot of people are just investing, and diversification can mean investing in a specific index, a specific sector, a specific stock, but also different asset classes. You see, most people are investing in stocks. Very few people understand that you can invest in stocks. Within stocks, you could do index funds, you could do ETFs, you could do growth stocks, you could do dividend plays. You could also invest in cryptocurrency, alternative assets, precious metals, real estate. For example, I invest into real estate. I have several small multifamily properties I do Section 8 on. I invest into cryptocurrency, various different cryptocurrencies within the crypto field. I invest in equities, various different equities within the equity field. And I also invest in pre-IPO companies, which is another way of investing into businesses. And there's other investments that I do, for example, like fine timepieces and so on and so forth. If I didn't have real estate in 2022, I would have been absolutely screwed. the same time, people are like, why do you invest in real estate? How much returns do you get? Oh, you're only getting 10% on your money? Well, if I invest in any crypto coin, I'm going to make 1,000% on my money. Or why are you investing in Truist Financial? You think you're going to double up? Palantir is going to 100x tomorrow. You understand what I mean? Look, when your growth is growing, it's amazing. But when your growth is not growing, it's a really shitty feeling. At the end of the day, to build wealth, real wealth, generational shit that you could pass down to your children and your children's children, you need to be diversified. I am as aggressive as possible when I was going into my 30s. I am now 40 years old. I have one more aggressive push. After I make this aggressive push that, God willing, is going to work out, I'm done being aggressive. I am going to diversify like a mofo. Why? Up to 40, I think you should be chasing the dollar as much as possible. And past 40, you should make sure that you're not losing the dollars that you've been chasing up until 40, if that makes sense, and enjoy your life. But that's just my views. So diversification, don't put all your eggs in one basket. The stock market brings both rewards and risks. Diversification across multiple assets classes like bonds, real estate, and commodities can mitigate these risks. These strategies ensure that when one portion of your portfolio faces a downturn, another one might be there to counterbalance it. Also, look beyond the stock market. Stocks are just one piece of investment puzzle. Other assets, such as bonds, real estate, can provide stability and varied returns. For instance, real estate can offer appreciation and rental income, while commodities can serve as inflation buffers. You have cash, you have equities, you have fixed income, you have alternative investments, so on and so forth. Finally, I want to get into this marathon mindset. If you are short-minded and short-term, man, the gratification is fantastic. But when you have days like this, weeks like this, months like this, years like this, like we had in 2022, man, that's just a feeling that it's so hard to describe unless you guys know what I'm talking about. You're literally clenching your butthole, like sweating and hoping this day ends, this week ends, this month ends, this year ends. I hated 2022 when it comes to investing. But if you got a marathon mindset, which is something that I have, and I'm trying to explain it to my subscribers, investing is a long-term endeavor, not a quick dash to wealth. Short-term obstacles are just that, temporary and surmountable. With patience, regular investing, and persistence, the rewards can be significant. And finally, I just want to say, you have been here before. I hope what I said in this video makes sense to you. I hope it gives you some type of understanding and psychological prowess when it comes to investing. And again, this is not just for the stock market. This is in business and all other asset classes that I mentioned earlier in this video. I was lucky enough to make some money off of YouTube. And I don't do YouTube to become rich or famous, although I would love to grow my channel and I would love to make money off of YouTube, like real money, but it's not here yet or there. If I was short-sighted, I would be screwed, because I'll tell you something. To be successful overnight, that overnight success takes 10 years, and anybody that's successful will understand the statement that I just said. And if you're short-sighted, you can get down on yourself and you can quit. The same is true with any investment that you're doing, including investing in equities. Shake it off. Tomorrow's a new day. After tomorrow is another new day. Then you have another week, another month, another year, a new investment here and a new investment there. At the end of the day, get your mind right, and I promise your pockets will follow. Not to be corny, if you guys want to support my channel, $3 a month. I have a link down below where I share some options plays, and I'm going to be putting out more videos. I just didn't get a chance yet, but I do have a lot of content for my channel members. Also, if you just want to support the channel with $3 a month, I appreciate it as well. Thank you very much. God bless all of you guys. Have a great day, and tomorrow is another day. Hopefully it'll be a green day, but even if it's a red day, make sure you're buying that dip. DCA into all your positions.